market just goes crazy because people don't know what to invest in. They don't know, is it long-term, short-term? What do we do? What do we talk to? What do we tell clients? How do we handle this? That's the question. That's what's on everybody's mind.
At this moment, a short-term issue. We can't forecast a 2008.
No.
And I'm quite sure this is not a 2008 situation. But we have to be aware.
Today's episode is brought to you by Security Financial Management.
Welcome back to Best Advice Podcast, guys. I'm your host, Rob Lavalio, here as always with Mitchell Walk and Dan LaForest. Gentlemen, what's going on this week, boys?
Well, the word of the day is tariffs.
Yeah.
And everybody is concerned about that, and that's what's going on.
It's been a wild week. It's been a couple of weeks.
Been a wild
actually.
couple of weeks, yeah. April's not been a great month.
Are you okay? What's happening?
I know taxes are due April 15th, but
And that's bad news all by itself.
that's bad news all by
right?
itself. So we've had actually a lot going on in April and March as well.
Yeah.
And
All
March
right.
as well.
We're going to get straight to the question of the day today. Today's question comes from Dan from Tampa. Dan, what you got for us?
Can I just get an understanding of what's going on in the market? Is this all due to tariffs creating a volatile market?
Thank you, Dan. Gentlemen, let's jump right into it. Who wants to start this off?
I've got you there, Rob. Well, it is tariffs. Everybody's concerned unless you are living somewhere where there's no TV, there's no television, there's no internet, there's no anything.
What I call actually paradise.
Paradise, yes. Somewhere on
Patrick from SpongeBob.
Yeah.
Patrick just
Somewhere
lives
on
under
an
a rock.
somewhere on an island somewhere with absolutely no information to the world. You're probably happier right now.
Yeah.
But we do know, everybody knows, lots and lots of uncertainty. That's what has created what has happened right now. We've heard there are going to be tariffs, then there was going to be 10% across the board, then 25% on certain countries, then just Canada, and then Mexico, and then 20% on China. It's very uncertain.
It's hard to keep track of.
Yes.
Too.
And when
There's a lot of changes.
yes, and so when the market and people don't know what's really happening and what's going to happen and what can change today, tomorrow, or hours at a time, market just goes crazy because people don't know what to invest in. They don't know, is it long-term, short-term, what's going to happen. It's April 9th right now. So today at midnight, we had 104% tariff get put on China. And then China retaliated today, I believe, with an 84% tariff on U.S. goods. The market's, some of it's down as we speak at around noon on April 9th, but not as bad as we've seen. But then again, there's tremendous daily market volatility. As a matter of fact, yesterday, April 8th, we saw tremendous market swing. We saw the S&P open up about 4.1%. Then throughout the day, it dropped down to 3%, which was a 7.1% swing in a day.
Wow.
Normally, we like to see the market up 7% a year on average. We saw a 7.1% swing in the S&P 500 just during the trading hours between 9:30 and 4 yesterday. And then it closed, it was up at the end, and then it came down, the S&P, and closed negative 1.6. Same thing, the NASDAQ, but even more of a ride because again, the tech stocks, the big Mag 7 that we have seen just have incredible growth over the last 2 years, big numbers. They are now seeing some big numbers down on the downside. So the NASDAQ has more of those Mag 7, more tech stocks in them. We saw the market open up great, 4.6%, and then it dropped down to a negative 3.5% sometime during the day yesterday for a difference of 8.1% swing during the trading hours. And by the time, again, it was up towards the end of the day, and then some more news came out, some more noise, as I say, came out, and it finished negative 2.2% for the day. And then the Dow also had big number swings. We all woke up yesterday morning, the futures were green, the market opened at 9:30. The Dow was up as much as 1,461 points, all on a rumor that possibly going to suspend the tariffs for 90 days. Found out an hour later it was a rumor. Dow drops
Tanked again.
massive. It drops
Well, it
down
didn't take, but
862 points
Yeah.
for a difference of 2,323 point swing during the day based on an opening rumor that was not really correct. It was a statement, but it was an incorrect statement. The Dow then, towards the end of the day, went up. And then towards the end of the day, it actually dropped and closed down 320 points, all due to uncertainty. No one knows what's happening, and it's making it difficult for everybody, and people are scared, and there is fear out there. We do have good, solid companies. We did, and probably, hopefully will, have good growth in the companies. So these are good U.S. American companies. It's the uncertainty right now that is creating tremendous volatility in the market. And yes, we are down right now. Hopefully, we can get some clarity and certainty back into the world, because this is not just a U.S. issue right now. This is a global world issue. And, I'm not sure where things are as far as the tariffs. They say that 70 countries are talking to the U.S. right now. We need something to get worked out as soon as possible. We need clarity. We need certainty, because uncertainty does not work and never has worked. Dan, what do you think?
No, I think the first thing I want to say is today is April 9th, 2025, because somebody could be watching this next week and literally like, what are these guys talking about? Clarity is what the market's always looking for, right? They're looking for that certainty. We talked about certainty. And what does that mean? It means that they understand what's in front of them. Right now, we don't know what's out there. We don't know what the tariffs, how China's going to react, or how Russia or any other nation is going to react. The uncertainty is we don't know where it ends. Once we understand that dust starts to settle now, it doesn't matter what it is. The market now sees that there is certainty here and they can adjust. It's no different than every other political conversation. This is why I hate adding money with politics, because it doesn't matter who's in office. You're always going to have policy changes that affect the certainty of how it affects a company, whether you're going to tax corporations more, whether you're going to place tariffs on companies. At the end of the day, companies have to adjust how they're going to make the bottom line, because the bottom line at the end of the day is really what everybody's trying to figure out. Every company out there, I don't care which one, they're in the job to be profitable.
And again, stocks used to be trading up and down based on earnings per share.
Yeah.
That's what it was, not...
Which those numbers are well outside of the scope that we used to see in value, right? I mean, how do you value a company and their share price? We haven't seen true valuations in what, a decade?
Long time, yes.
It's been a while. It's been an absolute while. So when you evaluate, and this is why so many people have gotten away from trading stocks, is because how do you truly evaluate a company anymore? Because the valuations are well outside that 20 times limit that we used to kind of rule that gauge of thumb by.
Yeah, the everyday, it's the earnings per share and the price to earnings ratio. I mean, they've skyrocketed on a lot of the big tech companies, and now they're, obviously with the losses in the market, those have come down. But
well, listen, technology has been probably the most volatile sector that we've seen here of recent, because technology is kind of like pharmaceuticals, right? You got this pharmaceutical company, they're on the verge of curing cancer. At the end of the day, it wasn't FDA approved, and here comes the stock back down. But again, this is why when we educate our clients, is our benchmark is the S&P 500. I don't care what the Dow did. I don't care what the NASDAQ did. It's a broader index for a reason, is it gives us a little bit more stable of a baseline. And then you talk about the S&P 500, and the client has to understand that the risk tolerance plays into the return, but also it plays into how much potential money they could lose in a uncertain period that we're in right now.
Yeah, and we even have to take a look now, even at the S&P 500, because a lot of those, the Magnificent Seven, which were magnificent, which were taking over and becoming a very overweighted portion of the S&P 500.
That's exactly right.
They were very, very overweighted. So now they've pulled back significantly. I think they said, again, according to CNBC yesterday, Apple has lost about $750 billion in market cap in about 6 days. They were well over $3 trillion, the first company, big company to do that. And I think now maybe only one is left over $3 trillion, Microsoft, if they're still there. They lost $750 billion of market cap. So the weightings of the Apples, the NVIDIAs, the Microsoft, the Netflix, the Tesla inside of the S&P 500 has come down significantly over the past, couple of weeks. So now the S&P has a broader base again, and we'll see where that is. But that is, one of the ones that you follow because it's 500 broad-based companies. But it started to, over the last 2 years, not get that way because those tech companies really, really overweighted what happened there.
Oh, yeah.
And that pullback has broadened things out a little better. What do we do? What do we talk to? What do we tell clients? How do we handle this? That's the question. That's what's on everybody's mind. Your thoughts on that, Dan?
I think you have to stay consistent in your message. Obviously, you're going to have some clients that do feel very nervous about what's going on. I think this is really the value of the advisor-client relationship, right, is understanding why it's happening, number one, and what does it really mean. Rob, you and I did a podcast a couple weeks ago, and one of the analogies I love to give is if you fill up your car, you're not checking your gas mileage every mile, right? It'll drive you crazy.
Yeah.
There are different slopes in the road that are going to affect your gas mileage. You want to check at the end of the tank. I think that we show historically that any time we have a extremely volatile period in the market, at the end of the year, it's actually gained back the majority of that, or even come back and you have positive gains.
Well, that was 1987. We had that Black Monday, the massive crash, and I believe it closed up slightly by the end of the year in 87, and it was between, I think, 22% drop that one day.
Yeah.
So,
and this isn't happening in one day. It has happened quickly over a handful of days, and I think the uncertainty is, like as we talk today, like I said, the market's up, but
for now,
is it back down tomorrow?
Call me at 4:01.
Again, it's kind of it's kind of like going to a tennis match, right? And you're sitting center court. It's this.
Ding, ding. Yeah, you'll drive yourself crazy.
So you have to drink an extra beer just so your neck doesn't lock up. I agree with Mitch. I think we have to turn off the TV, have faith in what you and your advisor have planned for, because we build this in. We're going to see volatility at different periods of our life. And a lot of people they get very worried about things, but we've seen these things before. And it's not necessarily tariff, it could be something else. Is have faith in the plan, because we have counted for volatility with just how we've positioned your portfolio. I think risk tolerance, risk reward scenarios have to be taken into consideration. Now, obviously, we don't forecast things like what we've seen here recently, but again, it's still at this moment a short-term issue. We can't forecast a 2008.
No.
And I'm quite sure this is not a 2008 situation. But we have to be aware. And at the end of the day, it's our clients' money.
And what we really, again, for clients, the advice is really let's take a good hard look at what is your risk tolerance? What is your time horizon? If you are retired or getting close to retirement, your time horizon is shorter than someone in their 20s, 30s, 40s, and maybe even early 50s. But as you start to get a little older, that time horizon does shorten up, and it does take time sometimes to get that money back to even. So that's the most important thing we need to make sure that people understand. Take a good hard look at it. Call your advisor. I mean, we're trying to call as many people as we can, but we also are here for you. If you are nervous, if you're worried at the moment, you should talk to your advisors.
Absolutely.
I know in our case at Security Financial Management, we are open, ready to talk to everybody. We're doing a lot of due diligence, studying a lot of what's happening, trying to get as many calls in as we can. But if you are really concerned, make that call, because we are not going to not take that call. We encourage it. Please get in touch with us is what we're looking for right now.
And the other thing too is, we are having meetings with a lot of the top economists, with some of the biggest money managers on a regular basis. So they're able to see through these things and really pass on information. Not only what we're seeing, right? I mean, we're if you're the smartest guy in the room, leave the room, right? We have people that are a heck of a lot smarter than we are, specifically about these issues, that we're in communication with. So we see that broader picture, and it's our job to communicate that.
Yeah, yesterday,
to the client.
The 8th, we had an hour lunch meeting with an expert bond manager. He directly manages billions and billions of dollars in bonds, and we went over the entire bond market with him yesterday. And we're talking to equity managers. We've got so many resources that we talk to people about and get information that we get back to our clients.
Absolutely.
It's funny seeing those reps too, is their mindset's totally different. They're looking at this like this is an opportunity. Like when the volatility is going down, they see that usually, I'm not going to say definitely, usually what follows is a bump, right? It's funny for me to see that rumors, like you said earlier, like rumors can actually persuade what the market's doing. It's almost
or even
like
a false statement.
Yeah, like
is really, because that's what it was, not a rumor. He actually made a statement. Someone in the administration high up made a statement that was not correct.
and
it killed the market.
I almost feel like some of the people is like talking, making their own demise, because they're like, well, if this happens in our policies, then the market's going to tank.
Yeah,
So
they're trying to
tank.
guess it.
Yeah,
It's kind of like watching the news, right? You got breaking news.
Mm-hmm.
I don't listen to half of it, because the truth's coming out in a week.
Mm-hmm.
Because by the time that happens, all the facts are out there. You can kind of put that stuff together. But I agree with Mitch. I think at the end of the day, we have to listen to our clients, but also it's our job to add perspective to what it really means.
Mm-hmm.
Is it an opportunity? Yes, if you're sitting on cash.
Mm-hmm.
But for a lot of our retired clients, man, they're all in. Their cash reserves are built into their plan for emergencies, not for investment opportunities.
Exactly. Their money and cash is there for their reserves now.
Summarize it all up. This volatility, what's it coming from? It's coming from
Uncertainty.
the tariffs, the talk, the noise, like we like to call it.
Which really, the word is uncertainty. Nobody knows which way we're going.
Makes sense. So we just pass the time until these things uncertain turn to black and white.
Except my hair.
Except my hair. My hair too, man. I'm getting a little gray myself.
It's not turning
a lot
white.
of gray.
It's not turning black.
I'm just trying to keep my hair. I don't care what color it is. But again, I think we have to have faith in what we have planned for, right? Because we do. Historically, the market is always going to go into a direction that favors us. But we were talking about the cash situation. Should I go to cash? Well, literally, you could do that, and by the time you get back in, you've missed 5% of the growth that happened literally in a snap of our fingers. It can come back as fast as it has gone down. But yeah, I think we just have to be listening. We have to be vigilant. But as advisors, we just have to listen really well to our clients, because, again, it's their money, and we're custodians of their future. So we have to look at each client differently and really understand how they perceive things, and then make adjustments, good, bad, or indifferent, based on what their overall objective is and how they see it as well.
Well, I hope that helps, Dan. If you want to talk to one of our advisors here, I'll leave a link in the description. We'd love to talk to you one-on-one. Remember, folks, the secret to wealth is not what you earn, it's what you keep. Happy days, everybody.
This podcast is for entertainment and educational purposes only and is not intended as personal financial advice. Before making any financial decision, please do your own research and consult a financial advisor as needed.